Okay, so good evening, everyone. This is a video regarding the seller net proceeds that you'll have to do and know the math on the real estate exam. So, what I'm going to do for the recording here today is just show you and walk you through the steps in terms of seller net proceeds. Now, the first thing that you guys are going to want to do is you are going to want to familiarize yourselves with these 7 words. And these words are all within the questions in this video. So, what is a seller net proceed? I'll tell you what that is. And then what I'm going to do is leave it up to you guys to come up with a definition that you will be using for yourself to help you know what these words means. But a seller net proceed is that obviously you're dealing with a seller that's selling this property. And with the seller net proceeds is really just one simple question. How much is the seller going to net after all expenses are taken out of the transaction? And so you, in a sense, would want to know this before the house is even sold to give the seller an idea of the cost related to the real estate transaction. So even before the property is even listed, this is something that you want to have an idea of. So when you go to a listing appointment, you can present the seller with what you think is going to be what they can net in the transaction with typical fees and things. Now, most sellers that you'll come encounter with will have some sort of expenses taken out of their proceeds. The biggest one by far is any mortgage that they have associated with them buying the property. Now, some people own the property free and clear, but most people still have a mortgage or some sort of mortgage lien on the property that needs to be paid off before before they sell. And we'll talk about that when we deal with mortgages and stuff. Typically, what that's called is a due on sale clause, where the mortgage is due on sale. Every mortgage has one in it, which says you have to pay the mortgage. It's due when you sell it. We'll be talking about that in other classes. But the selling our proceeds is simply a computation of a sheet that has a number of different expenses on the sheet. They are included. What's some of the fees is included in the selling that proceeds is commission. That's one of the big ones. As I mentioned, mortgage payoff. If there's any taxes that needs to be satisfied, if they haven't paid their taxes full up to the date that they're going to close, and most people don't, because here in Cuyahoga County we are a year in arrears. So the current year that we're in, most people haven't paid those taxes yet. So like we're in fiscal year 2022. We haven't even been billed for 22 taxes yet. We won't be billed for 22 until 2023 starts. So a seller wouldn't even have the opportunity to pay his 22 taxes, even though we're physically in tax year we're in physical year 2022. And so they haven't even been built yet. They won't be built for 22 until January 1st, 2023. Remember, we're a year in arrears. But the seller net proceeds is a very important document that you have to understand. And it's a lot of computations because this is where the seller knows how much he's going to make. Now, as I mentioned before, you're going to want to know this before you even list the property, because a part of your listing presentation is presenting them with the seller net proceeds. And you may have to ask them a few questions like, do you have a mortgage? If so, how much is left is owed on the mortgage, so you can accurately deduct the expense for the mortgage. You may want to ask if they pay their taxes full year. And you'll have some questions that you'll know that you need to ask them when you go to the listing appointment. Now, graduated commission is something that I want to go over a little bit more in depth. What it is that it's a scale, and sometimes, like with our company, we might do a 6 or 7% commission split. And what it does is when you're dealing with graduate commissions, it takes a certain amount of percentage on the first 100,000, a different percentage on the second 100,000, and perhaps even a different position if it's a big enough listing on like the third 100,000. So that is a way to reduce the cost for the seller in terms of doing a graduated commission split instead of what we call a flat commission split, where you just charge them a flat fee throughout the actual listing. So we'll talk more about that. I don't want to get into that a whole lot. Commission is just generally what you charge. That's not a graduated commission split. So if you're charging 6% commission, it's going to be 6% on the entire contract or listing. That is something that you will go over with your seller when you are doing a listing presentation. What are you charging them to sell their property? A first mortgage is the first mortgage. It's in the first position, and that's why it's called a first mortgage. It is the most ideal situation any lender wants to be in, is to have the first mortgage, and it's free and clear of any other encumbrances other than a tax lien that's put on the property every year. So a first mortgage is given to somebody that is looking to purchase a property, and that the main mortgage is typically the first mortgage. We'll talk a little bit more about that, but these are words that you want to come up with your own definition, and you want to commit to studying these words, so we won't have to really necessarily spend a whole lot of time on definitions. Mechanics lien. A mechanics lien is something that is placed on the property. If you had people out at your property doing work and you didn't satisfy the entire bill, sometimes people put mechanics lien on the property because a contractor may have worked on the property and didn't get paid. And so we will talk more about mechanics liens. It's an encumbrance. It's definitely an encumbrance, and it has to be paid off before a title company will issue title insurance to a buyer if the seller's property has a mechanics lien on it. Closing costs. There's a number of different closing costs. We have on each buyer and seller side pays closing costs. We'll talk a little bit more about that. Some of your traditional closing costs is, again, the commission. That's a closing cost. The title work is a closing cost. If you're a buyer, you will have to have an appraisal. That's part of the closing cost. And so closing costs occur for both the buyer and seller. But you want to, again, look up these words and come up with your own definition. And then the last word is a tax lien. Tax lien is something that is placed on everybody's property at the beginning. Now, there's a number of different types of tax liens. It's a tax lien for non-payment, but the tax lien that I'm talking about is a tax lien that's when the property's taxes are due at the beginning of every year. The fiscal officer puts a tax lien on everybody's property that's a taxable parcel within our county, Cuyahoga. So if it's a taxable parcel, you will receive a tax lien on that property. Everybody does at January 1st, 2021, or not 2021, but for next year to be 2023. There'll be a tax lien placed on everybody's tax or property for tax year 2022. So know these things and familiarize yourselves with the definition, because once you see these words, if you see them on a test, these words are associated with the seller net proceeds. So the first question that they're asking is example one. It's this one here. If a house sells for $100,000, we actually had this on a test, so I'm not going to spend a whole lot of time on this one. If a house sells for $100,000, and if there is commission of 4% and closing costs of $5,000, how much will the seller net? This is a basic commission question. It's saying that there's 4% on the actual deal. So the first step that you're going to want to do is you're going to want to. And what I do is I write down the sales price of $100,000. So that's the first thing that I'm going to do. Okay, so that's that there. All right, and this is something that you may want to do on your sheet. So the sales price is $100,000, and then the next thing that I'm going to do is I'm going to write down commission, and I'm going to put commission is 4% on this one, on this question. So what we're trying to figure out is the first step. The first step on this is to figure out. Here, let me get that for you. I'm about to reveal the first step. So the first step is this here. Step one, figure out the commission. The equation is 100,000 times 4%. Now, we had a little bit of conversation about how you want to treat it. You could go 0.04, that's 4%, or you could just go 4% and just say 100 times 4%, hit the percent sign on your calculator, and then it'll automatically change it into a decimal for you, 0.04, and that equals 4,000. With the remainder of $96,000, that's the remainder once you deduct the commission. So we have 4% commission, and we have $96,000 left. So the next step, step 2, is to then account for any additional expenses and closing costs. So back at the question, it says closing costs are $5,000. So now we got $4,000 for the commission and then $5,000 for the expenses, right? Now we're trying to figure out what the seller's going to net. And so we're going to do the equation for that. And that equation looks like this. So we accounted for our 4%. Now we're going to do the equation for this, and that's 96 minus 5,000, which now we only got 2 things we got to account for in this question. And those 2 things that we got to account for is the commission and then the closing costs. All right. So the answer is this here. And I'm going to put it in bold. That's the answer. And let me just put that in red as well for you ladies. And that way, that's the answer. All right. So the next problem is, it says George sold his house for $235,000. He is paying 6% commission fee and has closing costs of $4,200. And this one was also on the test. And I got a couple. We got 4 of them that you ladies that wasn't on the test that you ladies are gonna have to answer. So, but I'm gonna go over these. I'm gonna send you all some different questions. Actually, I'm gonna go over each step because these are all different. So it says George sold his house for $235,000. He is paying 6% commission fee and has closing costs of $4,200. He will also pay off his mortgage of $163,000 and a $10,000 mechanics lien. How much did George net on the sale of his home? Okay, sweet. So the first thing that we're going to do, remember, we're going to write down some stuff, right? So the first thing that we're going to do is we're going to write down our commission and the sales price. Okay. So the sales price is $235. Now let's figure out the commission. Up here it says 6% commission. So we write down commission 6% or $14,100. That's 6% of this. $14,100 is 6% of this here. The next thing that we're going to do is write down the closing costs or any other associated. Now, it don't really matter which way you put these, but I just read it out of the actual question and I put my lines down here. So closing costs is $4,200. You have to account for the closing costs because that's an expense. And remember, we're trying to find out what he's going to net, he or she is going to net. All right. And then it says he will also pay off a mortgage of $163,000. So that's probably going to be next. So we're going to put $163,000, and that is next. We're just writing the question out. And then the last one is that he has a mechanics lien of $10,000. So that's the last thing up. All right. So now our equation is going to look, let's go ahead and do the steps. The first step in this problem is to figure out the commission. All right. So we already know the commission is $14,100, but the equation is 235 times 6%. We already talked about how to treat this percent sign. Is either going to be 0.06 or 6% on your calculator. Type in 6 to press percent in the calculator, we'll figure it out. The answer to 6% commission is $14,100. The next step is to account for all the other expenses. Okay, calculate all the expenses and subtract from sales price. So we already got our commission, and then these are the other expenses: $42,163 and $10,000. So here's the actual it written out. So we got 235 minus the commission, which is 14,100, minus the closing cost of 4,200, minus his mortgage, his first mortgage, 163,000. And then also minus the $10,000 for the mechanics lien. At the end of the day, your answer to this client will be, George, you're going to net 43,700, and that's what you would convey to George. So the answer to this question, I'm going to bold it and I'm going to also put it in red, is 43,700. And here are all the steps that you want to do to get there. Really, it's only really 2 steps in this equation, but it's a lot. So I always like to do this so I can see it and make sure I have accounted for all of the things that I'm going to be doing with the problem. Now, example 3 says, Sheila wants to sell her home. She must, and let me move this down on a different sheet so we can get more room. It says Sheila wants to sell her home. She must pay off her existing mortgage of 55. This was another one that was on the question. She wants to pay off her existing mortgage and pay $2,200 in closing costs. If she has a 6% commission, what is the minimum offer she can accept? So these are all good. So let's go over step 1. Step 1 is going to be here. Add up all the expenses. All right. So we're going to take 55,000. That's the actual mortgage that she has to pay off, and $2,200 in closing costs. That equals $57,200. Now, we know we haven't accounted for the commission, but we do know that this number is going to be represented by 100% minus 6.5% commission. So we know that this number is a percentage of our answer, a big percentage of our answer, right? So step 2 is going to be calculate the commission. Okay, so now deal with the commission. We know everything is 100%. So if we are taking 100% minus 6.5 as its commission, then we know this number 57,200 is 93.5% of the number that we're needing to know with the commission added in. So an easier way to say that is that if you have a 6.5% commission split, you want to reduce the 100% to account for the. We don't know what the actual commission is, but we do know that it's 6.5% of some number. All right. And so that's the second step, that dealing with the commission. So we taking the commission out of we've accounted for the commission by taking it out of 100%. And then the last step is here, you're going to figure out what number 57,200 is 93.5% of. All right. So the equation is 57,200 divided by 0.935, or you could put 93.5% in the calculator, and you'll get this number right here. And let me change that because I know that one was wrong, and we're going to get this number right here. So I'm just going to double check some stuff in my calculator just to make sure we're not having any erroneous information on our spreadsheets. So the thing is again, we want to figure out what 57,200 is 93.5% of. So we're going to divide that by 0.935, and that is she would have to sell her property at $61,176 and I believe 48 cents. So this is 48, not 46. All right, or 47 cents. I'm sorry, this is 47. We're not going to round that number. So that's the answer. This is the answer right here. All right. And let me just go ahead and put that down here. The right answer. We're gonna vote that and turn it red. Now I know you guys haven't done this one, so these are going to be 3 new ones. William wants to net $85,000 on the sale of his property and has agreed to pay the broker 6% commission. Right? He allows for $3,900 in closing costs and $2,000 in repairs. At what price must he sell the property? All right, let's get to work here. So the first step is, again, here we go. First step is to calculate the known expenses. All right, we got $3,900. And remember, I didn't do this now. I want y'all to do this up here where you write everything out. But this is I'm going to get to the short and quick to it because I want to just show y'all how to get to the answers. And y'all, if you don't think you need to write it down, I would, but do what you feel as though that you're able to understand and interpret with these math questions. So calculate the known expenses. When we read the problem, we know we got $3,900 in closing costs. We got another $2,000 for repairs. We got an $85,000 sale on the property. So that the sale is actually, you got to account for that because he wants to make that, right? He wants to net 85,000. So we know that we need to account for that 85,000. Those numbers equal 90,900, right? The next step is to figure out what 6% of account for the commission. So we know that he said it was going to be 6% commission. So now we need to do our calculation account for the commission by taking it out of that 100%, and we get 94 cents. This number is going to represent 94% of this number represents 90. We're trying to figure out what this number is 94% of. That's really what we're trying to do. We've accounted for the commission and we've taken that 6% out. So the third step that we're going to do, and here's the equation, is this here. You're going to take 90,000 because we know that that's 94% of our number that he has to sell it for. So we're going to take 90,900 divided by 94%, or 0.94, and that equals $96,702.13, right? And so that's the answer. He has to do this, what he's wanting to do. This is how much he would have to sell his house for. All right, so we're going to put answer down here. That wasn't hard. It's just a different way of asking the question, and we're going to do a lot of this. I got a lot more of these questions. We're already ready for you, and I'll send those out tonight. So the answer is 96,000. $702.13. Let me bold that. And this is just selling that proceeds, y'all. We're going to get into more math. This is just this. And I honestly think that if y'all can do this, y'all can handle a lot of the other math. All right, so we got a couple more here. Richard just sold his house for $250,000. If he paid 5% commission and his closing costs were $5,200, he also paid off his current mortgage of $173,000 and a $5,000 tax lien. How much did Richard net on his home sale? So again, we're gonna write the equation, sales price, boom. We're gonna figure that out. We got it written down, 250,000, right? He's going, now we gotta account for the commission, right? So we're gonna take that 250,000 and we're going to divide that by the 5%, or multiply that times the 5%. I'm sorry about that. Multiply it by 5%, or 0.05 to get the commission. That's $12,500. The next step that we're going to do is account for any additional expenses. All right. And that's the expense of, we got the $5,200 expense for closing costs, $173,000 for the mortgage. We got $5,000 tax lien, and then that's going to equal $183,200. Now, the commission was not in there, but we need to add the commission in there. So here's the other expenses. The equation is this here that you see below. Equation is 250,000 minus the closing costs, because we figured that out here, equals $237,500, right? Now, on this line, and I did this a little bit different. I don't know why, I'm just showing you here. So we did that 237.5, that's with the commission out. And then we are going to deduct another $183,200, which equals $54,300. So the answer to this question is $54,300. Easy money. All right, we're gonna bold that, And that's just how you get to it. Now, the last one that I'm going to go over tonight is that graduated commission. This one explains that in detail. Let's read it. If a house sells for $525,000, and if there's a graduated commission of 6% on the first $200,000, 5% on the next 100,000, and then 4% on the remainder, and there are $5,000 in closing costs, how much would the seller net? And we're just dealing with commission and a closing cost. So the first equation, first thing we do is again count for the sales price. We did that right there. That's $525,000. The next thing is to count for the commission. So we're going to do that, and we accounted for the commission. Let me put that back. And now the commission is going to be graduated. So we got multiple steps in the commission. The first one that we're going to account for is the first the 200,000, because right here it says 6% on the first 200,000. So what's 6% of 500, or what's 6% of 200,000? And this is the answer here. And so 5% or 6% of 200,000 is $12,000. So that takes care of the first portion of the graduated commission deal. The next one says 5% on the 100,000. That's easy math. We know that's $5,000, but we still got to show our work. And so we're going to go ahead and show you that part of the equation. So 5% on 100,000 is $5,000. And then the next portion, it says, all right, so here, let me get back to this here. Okay. All right, so getting back to the question here, the next 100,000 is at 5%, and the next thing that we're going to do is the next one is the next last 100,000, because we got 5% of the next 100,000 and 4% on the remainder. So we got $300,000 accounted for. There's another $225,000 left that's going to be at a 4% graduated commission. So that next equation is the remainder is going to be 25,000 at 4%, or $9,000. So this 12,000 plus the 5,000 and the 9,000 is going to be the commission. Now we still have to account for something else, which is the closing cost. So let's go ahead and account for that. Closing cost is going to be right there, 5,000. And so we add all of these things up to determine his expenses, right? And how much he will net on this deal. So once we do that, here's the equation. Total expenses is going to be, I believe, like $31,000, right? And so the 31 has to come out of the 525, so he don't have a mortgage. He owns the house, free and clear. And so the equation looks like this for this problem: 525,000 minus 31. He's going to net $494,000 on this deal. And so the answer is $494,000. So let me put answer. And I want to bold in red. So that's just a quick example of some of the questions that I'm going to give y'all. These questions are going to be a little bit more challenging than these, but I just showed you the process in which you ladies are going to want to just follow this sheet. Now you take this sheet and you can just take it pretty much anywhere, really, to tell you the truth, and take this thing and it'll help you out a lot, you know. So, oops, let me go ahead and put that back there. And I'm going to send this to, actually, this is already in the video, so you don't necessarily need this sheet to take. If y'all like me to send it to you, I will send it to you. But this is the video, and so I hope this was helpful. If you have any questions about the Seller Net Proceeds questions that I'm going to send, please give me a call. Remember, look up these definitions and familiarize yourselves with these definitions, because they all have something to do with Seller Net Proceeds. And so this will conclude this video. And I thank you for looking at everything. And again, if you got any comments or anything how I can make the video more productive, please give me your input and feedback. And I appreciate you ladies for listening. Good luck.